What is up, YouTube? Welcome to Major Trades. This is episode 2 of Trader's Playbook, series focused on trading concepts, strategies, and tools used to analyze the market. In today's episode, we are breaking down stage analysis, which was developed by the infamous trader Stan Weinstein and popularized as well as publicized in his classic book, Secrets for Profiting in Bull and Bear Markets. And in this video, again, I don't want to go in the weeds of everything, so I would recommend you go ahead and read his book if you are interested in this. But with the video today, we're going to be running through some examples that I have for you, and I want to show you kind of how I apply it in my trading, as well as some of the core tenets of the idea of stage analysis. So without further ado, we'll go ahead and hop right in. So the first thing to understand is there are 4 stages in Stan Weinstein's stage analysis, which are stage 1, 2, 3, and 4, and they are described as the following. So stage 1 is an accumulation or basing period. Stage 2 is an advancing expansion. It's considered your bullish phase, and it's described by an uptrend in the stock. Stage 3 is your distribution or topping pattern, and then stage 4 is going to be your downtrend or declining pattern within the stock price. And so I have ticker symbol FSLY fastly pulled up here just because I thought that it was a good example. Like I said, we'll run through some other examples as well, but kind of give you a rundown of the stages of the stock. And so to begin with here, we have what is described as a stage 1 basing period. So as you can see, the stock is in a back and forth motion. There's no clear direction in the stock. And generally this is described by, the stock isn't breaking into new highs. It's not breaking down into new lows. There is just supply coming to market, stock still chopping around, trying to find a shareholder base, trying to get some direction. And then you finally will enter a stage 2 breakout. And so in this stock, the stage 2 breakout was initialized or started when the stock broke out. It gapped up into all-time highs on high volume, and then the stock continued to run. And this is what is described as a stage 2 breakout. And this essentially can be defined by higher lows, higher highs. The stock is breaking into all-time high generally. It doesn't have to be, but a lot of times it is. You have elevated volume on the breakout, and you continue to get elevated volume. If you're using moving averages, you're going to be above your 20, 50, 100 to 200 moving averages, and the stock is in a clear uptrend. And then stage 3 is what you get into here, which is your stage 3 topping pattern. There we go. So the stock no longer has that uptrend to it. It is chopping back and forth. You'll get a lot of these failed breakouts. So you'll break into new all-time high or into new highs. The stock will get smacked back down. You'll break into new highs. The stock gets smacked back down. Another key indicator of a stage 3 topping pattern is you'll have elevated volume. So this is a clear sign of distribution when it comes to shareholders. So there's no clear direction anymore. The stock is chopping around, it gets more volatile, you have higher volume, which will lead you into a stage 4 downtrend. And so as you can see, once the stock breaks down below its level here of 65, the stock goes into a clear downtrend after that, which again, you don't have to complicate it. It's just, you would describe it by the stock is breaking down, has lower lows, lower highs, it's below its 50, 100, 200 moving average, and the stock is in a clear downtrend. So the important thing to recognize about this is some stocks are going to have more clear stages, so to speak, but all stocks go through stage analysis. It's a way to analyze the stock and get better context of where the stock is in its life cycle. And a lot of times you'll have these stocks will go through all 4 stages. They'll set back up in their stage 1, and then they'll break out and whatnot. And so the reason it's important to us as traders is because we want to be focused on the stocks that are in stage 2 breakouts, as you can imagine. We want to be in the stocks that are moving fast and that are, showing that they want to go higher. We don't want to be caught in these stage 3 topping patterns or a stage 1 base when the stock is just chopping sideways, because that's not going to give us the opportunity to make money, and we definitely don't want to be going long in a stage 4 downtrend. So you have to have context of the trade itself, and so stage analysis is a way for us to do that. So without any more on that, we'll go ahead and give you some more examples. So Spotify is another example I have pulled up here. If my thinkorswim will load for us, maybe not. There we go. Okay, Spotify, get you a better time frame here. So this one, again, as you can see, you can probably start to get an understanding based on that first example. So right here is where you have your stage 1 basing period, chops back and forth. You get a stage 2 breakout as you break over these highs and you're pushing into new highs. Again, elevated volume on the breakout, clear uptrend, and then you get a stage 3 topping pattern, which has elevated volume in general. It's chopping back and forth. You get false breakouts, so this thing breaks out, chops, breaks out, falls back down, until you get into your stage 4 downtrend, where this thing breaks below its lows and goes into a clear downtrend. And then you have the same pattern again. The stock chops around for a bit, you end up getting a breakout. This one has a longer breakout. Now you're in kind of a stage 3 topping pattern, so you should be wary And again, sometimes stocks will go into kind of a stage 3 topping, and then you'll get it to start to tighten up and you can get another breakout. So it doesn't have to go necessarily in that exact order, but you just need to understand when a stock is in a certain phase to understand what could possibly be coming next and where you are in those stages. We'll go to Snap. There we go. I was going to say, I'm not sure why my thinkorswim's going so slow, but as you can see, again, you can probably tell, stage 1 basing period, you have your stage 2 breakout, stage 3 topping, and stage 4 downtrend. SMCI is another good example. And with this one, we'll go down to a little bit smaller time frame. Oops. Give us some more time, that way we can see the full. So in this instance, you're coming off of a stage 2 breakout, and the stock starts to go sideways. So you have your stage 1 base now, you get a stage 2 breakout. Again, elevated volume, the stock's breaking. This happens to be into all-time highs. And your breakout, your stage 2 breakout here, you start to get distribution here. Again, elevated volume, the stock has no clear direction, and then you finally break below this low here, and then the stock goes into a stage 4 decline. And MSTR is another example. In this one, you could actually, even down here, have your stages. Have your stage 1 base, stage 2 breakout, stage 3 topping, and now you're in a stage 4 downtrend, which is described by lower prices, lower highs, and lower lows. So those are the 4 stages in Stan Weinstein's stage analysis. Again, this video is not to go in super depth. If you do want to learn more about it, I would recommend you go ahead and read his book. And again, that's Secrets of Profiting in Bull and Bear Markets by Stan Weinstein. Really great book, and it really gives you context as a trader of where you are in those cycles. And like I said, previously mentioned, was as traders, we want to be focused on the best probability setups. And so if we can focus on stocks that are in a stage 2 breakout or coming into a stage 2 breakout, as if we're going long, or if you're going short, you want to be in a stage 4 downtrend, you want to find those stocks that are topping. So again, it's kind of context. I liken it to finding this hot stocks and hot sectors, right? If you're in the hot sector, you're going to have a tailwind. So if you're, I liken it to if you're paddling upstream, that's not what you want to be doing as a trader. You don't want to be trying to buy breakouts if the stock is in a stage 3 topping pattern, because it's going to fail. You want to be buying stocks that have based for a while in a stage 1 basing pattern, and then finally are getting to that stage 2 and they're starting to break out so you can catch that next run. So that is going to be all for episode 2 of Trader's Playbook. If you enjoyed this video and want to continue building your trading knowledge, be sure to check out the other videos in this series, which should be popping up on your screen now. And if you found value in this video or found it helpful, please leave a like, comment, and subscribe so you don't miss out on any future content. If this is a trading topic, or if there is a trading topic that you would like covered in the future of Trader's Playbook, let me know in the comments down below and I'll be sure to cover it. But thank you for watching. Major Trades signing off. Peace.